Welcome, everybody. Let's kick this off. So tomorrow is Tesla's Q3 earnings call, and people are now estimating the auto gross margins, and almost everyone is saying that it's going to be lower than expected. And at the same time, just yesterday, last night, today, Tesla launched a number of promotions, 0% APR for new Model 3s and Model Ys in the US. You don't even need to get FSD. They've now introduced inventory deals for inventory cars up to $4,000. They did reduce the referral program from $1,000 to now $500, and then they also included Cybertruck, where it's now eligible for free FSD. So are all of these moves pretty well across the board? Is that a timing coincidence? Is that something why they did it yesterday, just before the earnings? But at the same time, I think that we know already Tesla's and Elon Musk's strategy. In the first quarter of 2023, this is what he said in that earnings call. He said, "We've taken a view that pushing for higher volumes in a larger fleet is the right choice here versus a lower volume and higher margin. However, we expect our vehicles over time will be able to generate significant profit through autonomy. So we do believe we're like laying the groundwork here. And then it's better to ship a large number of cars at a lower margin and subsequently harvest that margin in the future as we perfect autonomy." He said this is an extremely important point. And then just now we heard the Palo Alto city manager or the spokesperson say that they're in talks with Tesla for making that one of the first cities to adopt the CyberCab. It still needs to go through approval from two regulatory bodies, but it sounds like these guys are in discussions. It would make sense. This is the location of, Palo Alto is the location of Tesla engineering. It's, very early adopters of technology. And these guys, Palo Alto, also already have a rideshare program called Palo Alto Link that they're providing for the community, and they're subsidizing that right now. And so this might make sense. So let's kick that off, Jeff. What do you think? Does this make sense? What are they doing with all of these promotions? And is volume the name of the game? And are you expecting lower margins for tomorrow?
Yeah, hey, Bert. I do think driving volume through your supply chain, your business, your sales channel, turning over inventory rapidly, is the way to go. Obviously, you don't want margins to dramatically fall, but Tesla does have counterbalancing things. I know we spend a lot of time talking about what's going to drive margins down. They're well discussed. When you put these promotions on, it's going to be an issue. However, them getting, if they're going to get their production, to around 500,000 units, it'll be a record production quarter. And so what they're doing is they're filling out more of their capacity, and they're going to bring their cost structure. They're going to continue to bring their cost structure down. They're sending a message to their supply base that says, "Look, we're going to keep pulling the volume through." So what I would envision is going to happen is, there's people are looking at margins, ex ZEV credits, not ex ZEV credit. By the way, it's one of the most absurd things I've ever heard of, and I'd have that conversation with any analyst at any point in time. Tesla's received ZEV credits for 44 quarters in a row. So usually you pull out one-time things. This is the 44th time thing. So yeah, you can look at it with and without, but these people that are like pulling it out and saying, well, that's the real view. Like, this is their ongoing business. And if anything, if you look at what's happening in the EV landscape, capacity is pulled back. It's not increasing at the rate that it was promised, from a few quarters ago from Tesla's competitors. So I think what we're looking for from this call, have gross margins bottomed, or are we just going to continue to take further legs down until we connect up into, this robo-taxi release on the S3XY? And the second thing is we would be looking for an update on page 10 of the previous earnings deck, which was that last paragraph on the interim lower cost vehicles. Tesla says they don't use their earnings calls for product announcements, and nobody should are you on track for your prior guidance or not? And if there's any additional details you can share, great. But like I've said, emphatically in a lot of our videos, Herbert, they're not going to talk about those vehicles, especially if they share anything in size and utility with the 3 and Y, because they don't want to Osborne. Like I've told people, and maybe if you're the first time listening, Tesla probably has up to $15 billion of supplier liability at any one point in time, to ramp up and to produce 500,000 units for a quarter. So when you Osborne a product, you literally create enterprise risk for that material that's in channel or that stock that's in channel. And so I don't hear, you won't hear Tesla talking about, specific launch timing until those things are ready to be ordered and to roll off the line. So yeah, that's what I would be looking for. Earnings call, kind of a message on gross margins, a message on where they see the following quarter going. Some of the analysts I've looked at overnight since Tesla launched all these promotions, and thank you, Sawyer, for communicating all that news as it comes out. I think it's super helpful for the community. But some of the analysts I've looked at, and some of the people that count cars professionally, are saying like, look, this is going to be a very big quarter now with these promotions. So my message would be is, as they're bringing up supply to those levels, they're going to be taking their costs down fairly rapidly. So I don't see this as like, it's like all bad news. And the question is where can they kind of cross over? And, even with these promotions, say they've bottomed. And one final thing is, as FSD improves and more people take that $7,000 or $8,000 option, that's very high gross margin for Tesla, as people take that on, whether they take it on, obviously in the monthly payment or upfront. So as they continue, which they are continuing to improve FSD and roll out all these great features, that's going to be another counterbalancing thing besides, ramping the supply chain up.
Yeah, thanks, Jeff, for pointing out all the different margins that are out there. Sorry, you've been very, very busy. Yesterday, you are the place people should follow you to find all the breaking news. You shared all of these new promotions that Tesla's offering, 0% APR, the change in referral fees, the Cybertruck FSD. And in fact, today, you actually even said you had a roundup of all the promotions. Do you think the timing is particular? Like, why did they do it yesterday, the day or two before the Q3 earnings call?
No, I think they just wanted to do it earlier in the corner. Typically, they do this stuff sort of last like 4 to 6 weeks of the quarter, but they're doing it early this time. They want to hit flat year-over-year growth. I mean, that's sort of the goal, I think, to hit 1.8 million if possible. But they got to deliver over 500,000 vehicles, which they've never done before. And they pulled the ultimate lever, 0% APR financing. I mean, they did that last quarter, but you had to purchase FSD to be able to get it. This time, it's essentially no strings attached. You can just get it. There are some restrictions to like length of loans and the amount of months you can do, but regardless, it's the ultimate lever. And I think we'll probably see even more promotions. I wouldn't be surprised as we head into the end of November and into December.
Gotcha. Okay. Hey, we got both Simon and Stock Talk. Maybe you guys can jump in about, what are you expecting for the stock? Everybody assumed that Robotaxi We Robot was going to be a big catalyst. So far, it hasn't. But we heard today, of course, Palo Alto, the spokesperson there, said that they're in discussions with Tesla. Are you still expecting all of this still too far away? In the meantime, you got these promotions that's going to do margin compression. Why don't you start off Stock Talk? It's been a while since you've joined us.
Yeah, good to see you guys. Yeah, no, sorry, I've been busy last couple weeks. I know you send me invites from time to time, Herbert, but when I get time, I try to jump in. I'll kind of take your question and maybe pull the lens out a little bit. I think that I like the fork in the road thing that Elon did. I think it's like a small little symbolic but important thing for not only Tesla employees but Tesla investors to understand at this juncture. This is a huge fork in the road for the business. There's a couple things I'll say, and I don't think any of these things are bearish, but I think they're just realistic. I do not see a scenario and when I say I don't see a scenario, I do not see any scenario in which Tesla will return to 50% CAGR on the car business ever. So that's the first thing I'll say. And I did not think that 3 years ago, but now I do think that.
I agree.
So that is a big step change in the narrative, in my opinion. And I think Elon, if you were to ask him, I don't think an interviewer would ask him this directly, but I think if you were to ask Elon, do you believe Tesla could return to a 50% CAGR on volume growth? I think that Elon's honest answer would be no, there is no realistic scenario in which that's possible. And there's a few reasons why. The first reason being, obviously, growth has slowed from where the peak was from 2019 to 2021. That's the primary reason. But under the surface, there's more than that, which is that competition has obviously grown. Tesla is still by far the leader in North American market share. I don't expect that to really dramatically change, but there is a larger field of available options now. And third, the more vehicles you make, the harder it is to grow those vehicles on a unit basis. That's just common sense. When you make 50,000 vehicles a year, it's easy to grow 50% CAGR. When you're making millions of vehicles a year, it's much more difficult to do that. So for those three reasons, it is nonsensical in my view to think that this company will ever return to a 50% CAGR on volume growth. If you agree with that notion, then you have to ask yourself, why is the company worth $700 billion? And the only justification for that, and I think Elon knows this, is that there is a software opportunity and a robotics opportunity that is available, which could have multi-trillion-dollar total addressable markets combined, maybe each. And that opportunity is what is floating not only the value of the stock, but hopefully investor confidence. Because I think you've seen and I look to price action to tell me more so what the investor base is thinking than I do look to price action to say, is the stock going to go up or down 5% the next week? But I think based on the price action around deliveries from the last 8 or 9 delivery prints, I think investors are becoming resilient around expectations of volume growth. And I think that's a good thing because, again, we're not going back to where the volume growth was just 3 or 4 years ago. And so if you believe in the investor base is becoming resilient to the idea of volume growth, then you have to ask yourself, why is the stock still trading at a $700 billion valuation? And I think the simple answer to that is the investor base currently believes that Tesla will capture either one or both of those multi-trillion-dollar opportunities. And so I think the narrative has to shift. A lot of the conversation around the last 5 years has been every earnings and every delivery. The Tesla community looks around these numbers. Are they going to beat or miss? Are they going to, how much is the car business going to grow? Are we going to be anywhere close to that 50% CAGR? These have been the questions that have been, prominently talked about for most of the last couple of years. Those are no longer the important questions. The important questions now are, how close are we incrementally getting to FSD being a global solution? And secondly, how quickly will the Optimus program be ready for a realistic subset of either manufacturing or rudimentary tasks that can apply to a wide base of corporate customers? Those are the only two things that matter at all now, in my opinion. And so I think everything should be benchmarked against those two expectations. And I frankly think everything else is noise. They'll continue to sell millions of cars. The growth will probably vary in the next 5 or 10 years, I would imagine, on an annual basis. I'm not really concerned with volume growth on the consumer vehicles, frankly. The Tesla Semi program will launch at some point. That'll probably do good sales, but I don't think it's really going to move the top line too much. So yeah, I think it's everything is about those two opportunities now. I think the street has to shift their expectation towards those two opportunities. I think the reason Wall Street was so negative on the 10/10 event was because there frankly wasn't a lot of detail. And I know it's not in Elon's nature to do that. It's not traditional and for Tesla events to provide that sort of detail, but that's what the street wanted. And that's why they were pessimistic about the event. But they also, at least most of them, understand that Tesla is trying to pivot to this new opportunity. It does not want to be the business that it was in the last 10 years. It wants to be a new business. I think that's why Elon did the fork in the road thing. But yeah, I think this is going to be a very interesting story over the next 10 years. And it's certainly a more binary opportunity today than it was if you bought the stock, when I did back in 2015, 2016, when the story was, hey, they're going to be the leading electric vehicle seller in the world, and they're going to grow units at an insane clip annually. And by virtue of the growth, the stock will go up a lot. That was the thesis then. That is no longer the thesis. And anybody reasonable, I have not heard anybody reasonable contend the idea that we're going to return to 50% volume growth. I'd be curious if there is anyone that wants to make that argument, but I don't think that's an argument that's being made anymore, at least widely.
Yeah, the only thing I would add, I agree with that, that premise of there's a couple of multi-trillion-dollar opportunities that the company has organically and or even beyond that, licensing those opportunities. That in itself could be greater than the sum of the parts can be much greater than they are even as an existing unit. The only thing I would say is just from my experience and from going through a cycle of bringing a product line or portfolio line, in the case of smartphones, from zero to eventually a billion plus unit run rate per year. You don't do there's going to be a doubling that occurs when they start building the robotaxi like vehicles. Those are going to be in much higher volume given the cost structure, and in the whole EV industry, I think will be at higher volumes at that point in time as well. And so Tesla can't hang out at the this 1.8, this 450, 500K a quarter. They're going to do something between what they're doing now and probably I would anticipate something like on the order of doubling per quarter when they start building products like this at that sub $20,000 COGS that are being sold in the mid 20s and with incentives and everything else out there. So the only thing I would add to that is, Tesla has said, like, look, we put 3 million units of capacity in, and when we start building these lower cost vehicles next year, prior to the unboxed product, we think we're taking our capacity in production up, to up to 50% more. At least they said that these vehicles could enable production to go to 50% more than what 2023 and ultimately 2024 ended at, which was the 1.88 million. So the only thing I would say is I do think that there's some interim step with these vehicles, and you need it. Like their supply chain needs it. Their supply chain can't go from even both from a COGS perspective and from a volume perspective. It can't go from what it's building today, which are 33 or so $1,000 vehicles on the low end in the U.S. and probably 28 to 29,000 in Shanghai. It can't go from building those to building a $17,000 to $20,000 vehicle in one jump. It's going to take an interim jump in the middle, and that's these lower cost vehicles that are mentioned in page 10 of the last earnings deck. So I actually think that that's going to drive some fairly significant volume growth. It's a question of timing. I don't think they should be. I don't think they should be discounted per se. I don't think Tesla's going to have another flat year next year. I think they're going to introduce lower cost vehicles and they're going to start driving volumes up. By the way, that's the only reason you would do what they're doing right now, which is to keep their supply chain running, keep the utilization rates high, keep putting pressure on suppliers to run their costs down lower so that they can meet the moment for the next set of vehicles. So that's the only thing I would add to it. I don't think it's a hardware story, by the way. I agree with you at end state. The big things out there are the robotaxi network and Optimist. But I think between now and then, they're going to have to ramp to that. One, two, I think there's going to be a series of, and I've been saying this, and I will continue to say this, I believe there'll be a series of licensing announcements that come between now and the point of production. So I think there's some milestones between now and then.
Yeah, I agree with most of that.
Simon, we have. Oh, so yeah, stock talk, please go ahead.
Yeah, no, I agree with most of that. I think. Look, I think there's an opportunity to inflect volume, and I think production capacity is a lot more open ended than it was 5 years ago. I mean, I think 5 years ago you looked at production capacity as just an outlet to feed further growth, right? Like, hey, every unit of production capacity we add is going to fuel a unit of growth. I just don't know if that's the case anymore, and I think to an extent they want to retain flexibility because maybe they're unsure of what initial demand might look like on some of these new products and how quickly they might want to ramp them as opposed to their traditional products, which the last few launches have been ramped pretty quickly in light of basically unlimited demand, especially with the launch of the Model Y. That kind of perfectly hit the peak of the EV theme with the launch of the Model Y. The background market, in my view, the macro, if you will, may not be as conducive to immediate ramps as it has been with previous products. And I think as a result of that, the company's probably going to retain a little bit excess production capacity, I think, or at least guide for excess production capacity than what they might actually utilize. But yeah, I agree with most of your other points. I mean, the thing I guess that is most concerning to me is what I try to do when I see like shifts in like the idea of a core business, which is what Tesla's going to try to do over the next decade. It's a very, very difficult feat to pull off when you're a $700 billion company. But when I see a shift in the core business coming, when I try to walk myself through what the fundamental ladder is going to look like. And I guess I would say my only real point of concern is I don't see a great scenario for margins in the medium term in any way I try to like, make it work in my head. And I've, spent most of my adult career like just trading stocks and analyzing companies. And so I feel like I'm pretty decent at imagining where I need to imagine and being flexible with like, my assumptions. But even when I'm flexible with my assumptions, it's hard for me to imagine a great case for earnings per share. In the medium term. And I'd say that's probably my most immediate concern.
Yeah, no, that makes sense. I don't view this as like in the next couple of quarters as some big EPS inflection. We really need to see, what these new vehicles are and how they're going to scale them, and then the Model Y is going to be refreshed. And I mean, to me that's more about preserving that curve, that being that top selling vehicle, and more preserving it so it doesn't actually die off and start curving down, more versus like having some big inflection from that. The big inflection has to be from if you can get vehicles priced at around the 30K level or below before incentives. I mean, I think that's kind of a big deal, and that will drive a considerable demand increase, because again, these are Teslas. This isn't the Chevy Equinox, with all these buttons and no ability for autonomy, and none of the kind of the core features you get in a Tesla. So yeah, no, it's interesting. Simon, how about we bring you into this conversation? What do you see as earnings approaches tomorrow, and kind of how it plays out over the next couple of quarters? If you're speaking, you're on mute. And if you're not available to speak,
Yeah, hey guys.
oh, there you are.
Sorry, bringing my kids to swim lessons every Tuesday. But good conversation. I think Stock Talk, what you were referring to, was pretty bang on with regards to margins. So this is sort of my view on it. Is the stock has gone down from 400 to 200 in the last 2 years, and I think that has been a repricing of everybody expected the stock would appreciate the earnings would appreciate by 50% per year for until 2030. So I think there's actually been a revaluation of the stock, but at the same time, the valuation of the automobile business has gone down the valuation of their other businesses has gone up. And that's the only way that I can reason as to why the stock is at $700 billion valuation, because it's certainly not off their auto business. Now, could they grow their auto business sales by 50% a few more years going forward? I think they could. You know, I think that if they realize the demand is there, but we've seen them come back on, 2 years ago and a year ago, we were all looking at where is the next factory and where are they expanding in China, and is Mexico going to happen and India is going to happen? And that was really the talk for a good part of 2 years. And they've really seemed to pull back. And I think that fork in the road that people are talking about has been really, we're moving to the next chapter or next book. And we've moved on from this, and we'll sell as many cars as the market has an appetite for. But where we see the next leg of growth is going to be autonomy and robots and energy. And I think that's why the stock gets such a massive valuation. And I also see like when margins come in, and we haven't seen earnings growth in this company for the last, I don't know how, 2 years almost. Why does it get such a massive multiple? And I think that's it, is that people are watching the AI development and they're recognizing the potential. Our firm and our chief strategist is banging on the drum saying, hey guys, if you've missed out on NVIDIA, start buying Tesla now, because this is an AI play and the rest of you, or most of the market, is missing out on it. And $700 billion is nothing to pay for this company at this stage when we're looking at over the next 5 years. So, what happens tomorrow? I have no idea what's going to happen in the earnings. Obviously, as a portfolio manager, we're hoping the stock goes up, or else we're going to get clients calling and concerned. But honestly, it has nothing to do with the margins and their how many cars they sold. Everybody is looking at those, but you'll see you don't really get a massive movement in the stock anymore because of their margins. That was like last year's story. Now it's really, I think what we need to have happen tomorrow, and I'm not wishful or hoping, we've all done that on earnings calls before, but I'm looking at this and saying, I think we need to hear more about the details of the event that we saw on 10/10. Because there wasn't many details, but we all watched it, and it was spectacular. And it was probably the best event ever in public company history. But people sitting at their keyboards, naysayers and Elon haters, were very quick to comment with how it was missing something. So regarding their margins next week or tomorrow, I don't know. I don't think that's going to drive the stock. If we get a number margins are missing, I think the big story is going to be what's Elon's mood? Is he going to forecast what's going to happen with autonomy and energy over the next year or two? I think that's what Wall Street's looking for. But the auto business is, it is what it is. They've mastered that, and they'll just produce as many vehicles as they can.
Yeah. Okay. Just one quick nuance. I think that I still believe that Tesla will hit another 50% growth. Here's why. Number one, we're at 2 million car sales per year, right? So 50% growth is to 3 million. That's an additional 1 million. Now, this is predicated on compact car, on the CyberCab, because once autonomy is on its way, what is Tesla going to do? They're going to create, massive factories to mass produce this. It was designed for mass scale. And if you saw the estimate that Tesla had at one point for this, not only the compact car, but specifically, I think the CyberCabs, it's going to be at the 5 to 7 million per year range, right? So again, I know you didn't necessarily say that, because I know you're saying that obviously if robotaxi happens, if autonomy happens, it's no longer competing with 90% of all cars out there aren't going to be able to have this technology. So it's a wide open market again for Elon. But yeah, let's talk about the earnings call tomorrow. And so thank you for that, Simon. What do the other panel members here think is will Elon actually talk about the robotaxi program? Because there was the reason why apparently, according to a Bloomberg report, that he didn't talk about it, the We Robot, was because of the 2 medical emergencies, but he was prepared to share more information about the app, about Tesla Semi, and about the pricing. Do you guys think that he'll at least talk about it, or maybe even show it in the earnings deck? Or do you guys agree with the other side, which is you don't talk product during an earnings call?
I think we all know Tesla well enough that where we could probably go and look at the top 5 retail investor questions for tomorrow and probably know exactly how Elon is going to answer them. And it's specifically on product announcements. They're not going to do that on the earnings call. Elon's going to say this is not the forum for product announcements. Yeah, they 2.5, 3 years ago they unveiled the refresh Model S and X on an earnings call, but in general they tend to just wait to do it on its own day. I'm not expecting much. I don't think the earnings will be that good. I think margins will be rough, and I think they'll continue to be rough this quarter and into next quarter. But the commentary from Elon is always the most interesting part for me. So we'll see what he says, if anything interesting. We're 2 weeks away from the election. We're really interested to see if he mentions that at all in any way. So yeah, we'll see.
Yeah, I think.
Yeah, the only thing sorry, go ahead, Scott.
I was just gonna say, I think the questions that were voted for are terrible. I don't know why we do this, but if you're in the audience, I imagine a lot of you are Tesla retail shareholders. Stop asking questions about products, guys. Elon has made it abundantly clear over and over again that he will not answer those questions. So, yeah, I do not think he's going to address product announcements or a roadmap or anything on the call. I would be surprised. Maybe it'll be an exception to the norm for the reason that he mentioned after the event, more announcements to come. So maybe that's a hint that he might mention something about it. But I don't think he's going to deviate from what he normally does and just talk about the business. But I do think he'll talk about the pivot in the business. I do think he'll talk about that, which is that the fork in the road, if you will. I do think he'll talk about that in the earnings call.
Yeah, and in the last 2 quarters, they have put that section in about introducing these. They actually did do a pseudo product announcement on the earnings call. I know it's totally conflicting. I agree with the normal course, but they did, and he did announce in the earnings call in April of these interim lower cost vehicles. Maybe it was a prior one, but certainly in April, and then certainly they followed up in the July earnings call, and they reiterated it, and they updated that section on page 10 in the earnings deck. So I'm expecting an update to page 10 in the earnings deck. And what is the status of those vehicles? Are they on track? And are they, is he adding any additional detail to that or not? And I want to kind of be clear, is I actually do think that there is a vehicle growth story, because you can't get to robotaxi and you can't get to the scale that they're going to need for Optimus without, I just want to reiterate that point, that they're going to have to come up a curve. And I believe they think they're coming up that curve by splitting the difference between a 25K vehicle and where they are today, which are basically 35 to 40K vehicles. And I believe they're going to split that difference with these interim vehicles. So I do think that there actually is a growth story there. And by the way, couple that with a lot of the OEMs just having to pull back from necessity because they don't want to accelerate losses. But yeah, in terms of the call, the questions are definitely are not going to elicit a lot of great conversation. But it'd be great if he can comment on, I agree, on the pivot and where he sees this going. He has mentioned on prior calls too about partnership discussions. So if there's any updates on that, I know we're always hopeful for those. Not that he's going to announce a partnership per se on an earnings call, but are there more people in that conversation, or have they advanced to another level that they may have not been to before. But again, I think you would do a partnership announcement on a separate call. A formal product announcement would be on a separate, event or some sort of separate thing, not an earnings call. And yeah, I think it would be interesting. Maybe there is going to be a question of, hey, there's an election in 2 weeks. What are the implications for the company? Based on either candidate winning and based on government being split or going in one direction or another. I do think that's an appropriate call, appropriate question, given his involvement and given, that his businesses are kind of, you know, they're kind of on the cutting edge of a lot of these discussions. So I would look
Elon
out
did
for
say
that.
he wanted
Simon?
to see what would happen with the election before they made a decision to move forward or not with
Yeah,
Big Mexico. So
yeah,
We'll get to you,
yeah. You're
Simon.
right.
But Sawyer, I want to ask you. You broke the news about the Tesla talking to Palo Alto City about potentially doing a robotaxi deal with Tesla there. Would they not maybe announce that tomorrow? Not, again, all they can say is we're in discussions with them. Nothing's been approved. There's 2 regulatory bodies that still need to approve it. But just say, yeah, we've identified the cities. Palo Alto is one of them that we're in discussions with.
I think the extent to which they would talk about it would be, look, Tesla, our engineering headquarters is in Palo Alto. It's a logical first step for us to initiate an initial robotaxi testing. We're in discussions with the local officials, but we're still going to need approval from the California DMV and the California PUC before we can even, move forward. So that could take who knows how long. So even though like this, it's great they're in discussions. This is like a great first step. It's a sign that things are progressing. It's a positive step, but it's probably still going to be a while before they get actual approval. Nonetheless, this is like Silicon Valley. This is the heart of Silicon Valley. There's a lot of other autonomous providers in the area that have gotten approval. By a lot, I mean like a couple or a few, but yeah, I don't see why they wouldn't approve this eventually. It might take a while just because of the
Yeah,
bureaucracy, but
it's already out. So Jeff, I was going to ask you what in this kind of scenario where the city leaders of Palo Alto are in discussions with Tesla, they went and said and announced that they're in discussion with Tesla. So, obviously Tesla would probably not, give them restrictions. Would they have timed it?
Possibly. It's hard to put restrictions on. Governments have requirements to do disclosure. Just like if you submit a product to the FCC for approval, it's not like they can necessarily. There's certain ways to do submissions to the FCC where it's actually under embargo or it's hidden. But most routes actually they actually have to disclose like what's coming into their lab for testing. So yeah, Tesla has less control over what a government can or cannot say. But yeah, no, I think it's interesting, and I think it's newsworthy, right? This is just the story's progressing. Now they're going for approvals. Maybe it starts supervised. Maybe it doesn't start supervised. Who knows? But they're stepping through the process, and it's good to hear. And I think these interim steps I think are important for the overall story. Like this isn't going to be some loud bang that happens at the end of next year. You'd want to see these interim steps actually happening. So I think that's good news. I think it's reinforcing, to that. But yeah, I mean, I think the reality of the call tomorrow is, you have a stock that, let's see what they report in earnings. But it's obviously at the high trading on forward earnings at the high end of where it nominally is. By the way, it's traded much higher than this before, and not saying that we want to use the prior peak price in November of 21 or October of 21, but it was, I mean, I think at one point it got to 255 times forward earnings. So this isn't a PE, just pick the PE and it's not gonna go above or below that. This isn't one of those stocks. It's not that story. It's more complicated than that, unfortunately. And time horizons really come in. So I don't think this is the stock where you just can't say like, well, the PE shall not go above this number. It's not going to work that way.
the Palo Alto city
Simon.
officials were actually at the 1010 event themselves. So Tesla invited them probably because they were like, look,
Yeah.
these things are farther along than you might think they are. So let's get this going, this approval.
Interesting. Yeah, and they're here, right? The prototypes are here, and they're built. They may even be, obviously building more of them. So yeah, I mean, what are they gonna do? Sit in a garage and gather dust? No, let's get testing going. I totally
Yeah,
agree.
Palo Alto has a service already that they're subsidizing. Hey, Simon, sorry for making you wait.
No, I normally jump on this pod not to talk, but to listen to you guys because I get so many. And I think most people join this pod just to listen to people and get your thought process going, and we share ideas. But one of the things that occurred to me is I'm thinking about the earnings call tomorrow. I'm going like, what is it that Wall Street's looking for? And I know that we've heard a number of people saying, what were the disappointments at the robotaxi event? And one of them was, I didn't think too much into it, but if I were to say what would be the perfect call, and it's not going to be earnings or margins, that's really not going to move the narrative. But it really is going to be prove where the FSD and AI is going. So if they could do one, show the improvement of FSD, not from the start, but since they moved to NeuroNet, and prove and show that this is what's going to happen based on this compute, and this is what's going to happen on the compute over the next 12 months. Then if I could get an idea of how are they going to charge people to use robotaxi and say, listen, we're going to take 30 cents a mile or 20 cents or 10 cents, whatever that is. And then here's our plan to build the robotaxi. And here's our ramp strategy. Similar to what they did for the Cybertruck. And they said, look, our goal is it's going to be very difficult ramp. Margins are going to be tight, but we're aiming to get to volume production, which is, 200,000 vehicles per year annualized by the end of 2024. And if we can get a clear roadmap as to what they're going to charge, here's the progress of FSD or the robotaxi scene FSD, and here's our timeline for how we're planning to ramp. That would be pretty impressive. And then you would get many of the Wall Street analysts who have not put this into their spreadsheet to wake up and say, okay, this is what they're planning. And you and many people in this space look and say, well, we don't doubt what they're doing. They do the impossible. They're just late. But you'll get, I think you'll get Wall Street waking up to that fact if you can start just hand feeding, here's our plan in terms of advancements on robotaxi.
Yeah, if they want the stock to respond, they have to do some hand holding with the street. And look, I think the Palo Alto news is actually, incrementally speaking, very good. Obviously, California regulators and Elon Musk don't have the best relationship right now, but Tesla still does a lot of business there, and I think if they can find their way around regulations and get that program launched in Palo Alto, I think it'll go a long way for the stock, frankly, because I think proof of concept is like the fruit for speculation on Wall Street. If you want analysts to speculate, you need to just show them that it works. A lot of times there's skepticism, not because of the technology necessarily, but there's just like an inability sometimes for sell-siders to imagine, if you will. And so something as simple as a demonstration can go a long way. Obviously, it didn't go too far for them with the 1010 event, but a real world demonstration, in a limit, even if it's in a limited fashion in Palo Alto, would be, I think, good. But it also, there is a narrative kind of thing that I think about when I think about this, which is that when I distinguish Tesla from Waymo, I think the main point of distinction is that, look, Tesla's going for generalized autonomy that works everywhere. And I think people kind of have this kind of assumption that when it's complete, when FSD is complete, it's just going to be like the snap of a finger, and everyone everywhere is going to be, have driverless cars. And it's like that's just not how it works. Obviously, from a regulatory standpoint, but also, I don't think there's a problem in rolling it out incrementally, especially before the technology is ready. And so I think this is at least somewhat of an indication that that's what Tesla's thinking as well, because if they're entertaining the conversation with Palo Alto, and based on Elon's comments on 1010 about launching in Texas and California, I don't think that's a terrible strategy. Texas and California are huge states. 30 plus million people each. And so there's plenty of people there. And so I don't think it's a bad strategy.
Yeah, I agree with you. It'll take some time to roll out, but once people start recognizing the value, it's probably going to be through the robotaxi. I'll give you an anecdote that's interesting. Is I had one of my staff came into my office this week and said, "I have a question for you regarding Tesla." And I said, "Excellent, I'm your guy." And he said, "This full self-driving, how do you think it's going to work in the wintertime up here in Quebec with all the ice and the snow and the storms that we get in the wintertime?" And interesting that that's the perspective of somebody who doesn't have the full self-driving or Tesla. And that was my perspective. My first Tesla I purchased a number of years ago. Why I didn't purchase the FSD, as I said it wouldn't. So, but my response was, if that's all we have to worry about is making sure the cameras are cleaned and kept hot so they don't freeze and ice goes over them, then we're golden, because that is a simple problem to solve. The real problem which we're experiencing now is, how do you actually solve perfect full self-driving on all roads and all conditions?
I don't want to derail the conversation because it's going really well, but I just want to go back to, at the earnings call, they're very likely to confirm and give guidance to what they're expecting for the new affordable vehicles, because that's what they said, right? That they expect it to happen maybe the end of this year, maybe in the first half of next year, more affordable vehicles, whether it's verbal or it's written. I know that's what you referred to, Jeff, when you kept saying that you want to see another page 10. But if they say that, isn't that just that alone? Isn't that a good confirmation that they're still on track for that?
Confirming that they're on track is important. But if there's any other visibility that they can provide, I think it would be good. And then for me, any updates on partnerships? Are those discussions expanding? Are there discussions regarding the bot and partnerships? And excuse me. And I just think an update on both of those areas would be helpful. I think there's one other area. I just need to grab a drink here, but I think the area around progress on FSD is important, because in the absence of data, there are people on this platform, and there are people without any math skills or any skills in statistics, that are going out and grabbing data points because somebody from somewhere published something and put it on X. And I was just looking up, like, when you have a sample size of 500,000 vehicles, or 500,000 is N in a sample size, and you're trying to look for variation of Y, like what size does the sample size need to be to determine, to have some sort of deterministic output. And I was just calculating that before you ask the question, because this is what you do in real life when you're shipping a product and you're trying to understand the effects and you're trying to understand progress. So why am I saying this? I think they need to articulate some amount of progress on where they're at with FSD beyond the crash statistics, which were just published today, which is great. That it's, I think it's 1 in 7 million miles. It's, greater than 10 times safer than not driving on FSD. I know Tesla has more data in aggregate. They have the data coming off these, 500,000 vehicles running FSD. And that's why they're making some of these statements regarding, safety critical interventions. And so for me, if they could actually, instead of saying, like, we think we're going to be here in 3 months or 3 weeks, that to me is actually more difficult to do, because I think some of these models while they think they can make, sizable leaps, they can be hard to predict. like we're going to be here by November 15th. I think that's difficult. I think what's more straightforward is like, look, here's the first model was trained in January 2024, and it yielded this performance in the fleet. And the last 3 models that were trained under different models, they're performing like this in the fleet. And here's the relative improvement we're seeing. And as we add compute, is it the square? Is it the sum? Like what is the improvement level that we're seeing in FSD performance as compute is added? I think that they could actually potentially go into this information, and I think it would give people a little bit more confidence of where they see this going and what kind of improvement we may see in the future by actually discussing the relative improvement we've had. Because the only data that's out there is 212 cars on some sort of third party tracking site, which I applaud people for trying to do. But when you're actually trying to quantify these things at a fleet level, at a install base level, and the many hundreds of thousands and eventually millions, you need a different data set than what's actually being published out there to have any kind of meaningful output. So that would be the other thing I'd be looking for.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.